Ladies and gentlemen, good day and welcome to eMudhra Limited Q4 FY25 Earnings Conference Call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference has been recorded. I now hand the conference over to Mr. Venkatraman Srinivasan. Thank you and over to you, sir.
Thank you. Good afternoon, everyone, and thank each and every one of you for joining us on eMudhra investor call for the full year FY25. FY25 was a healthy growth year for eMudhra, with total income increasing by 38.9% year-on-year to 527.8 crores. Adjusted EBITDA grew 15.7% to 141.3 crores at a margin of 26.8%, and the adjusted PAT grew 17.3% to 94.6 crore with 17.9% margins. The adjustments include certain one-off and non-recurring expenses in the profit and loss account, including rupees 8.9 crores for ESOP and finder's fee costs. We further incurred rupees 8.75 crores towards buyback of digital signature certificates as a result of the regulatory change in the Indian Trust Services business with effect from July 15, 2024. Over the last few years, we have diversified internationally across geographies, and our international business now contributes 62% of the total revenue. And our partner-led model has strengthened significantly, accounting for 68% of Trust Service business and 46% of Enterprise Solutions business revenue. Then our acquisition of Icon 295 and CenterCup contributed nearly 28% to the revenues, helping us to expand our market presence and product scope in the US market. The acquisitive growth for the year was about 18.8%. Again, the balance 20% organic growth was driven mainly by our solutions business, where the growth was about 27%, given that our trust service business was relatively flat. We have continued to scale across markets and sectors with high-quality customer wins. These include a PKI rollout for a citizen service platform in India, large-scale e-signature deployments in the Philippines and Middle East, and adoption of our certificate management platform by a global gaming company in the US. In Kenya, our CLM platform was chosen by a key IT infrastructure operator, and our managed services were deployed by the cloud security division of a leading ERP vendor in North America. These wins reflect the scalability and global readiness of our solutions, supported by leadership hires and the new offices across North America and Southeast Asia. From a product perspective, our focus has been to make our technology more intelligent, more secure, and more easy to use. For instance, mSigner lets banks or HR teams send and sign official document digitally, like a job offer or a loan agreement without printing anything. Now, with our planned new GenAI features, mSigner can even read a document, extract intelligence, point out possible risks, detect deepfakes, and carry out instructions like send this for approval just by voice or text. Today's enterprises operate across hybrid clouds, remote users, and countless apps, making it impossible to manually track who should access what. This is a massive cybersecurity issue for any organization managing security at the application and the data layer. Secure Path centralizes identity and access policies, learns normal behavior, and instantly flags anomalies. With a roadmap for built-in behavioral analytics and visual access graphs, it will show user device application connections, and it will alert you the moment anything deviates from the norm. And then our other product, CertiNext, which manages digital certificates. These are like online digital identities for servers, websites, and devices. It now fixes potential issues such as certificate outages by automatically renewing and provisioning the certificates before they affect the users. Importantly, we are enhancing the platform with new algorithms in post-quantum cryptography and new protocols in device and IoT identity management to prepare for tomorrow's cyber challenges. All of this comes together to support what is called the zero trust security model, which basically means don't trust anyone or anything unless verified, a concept that's becoming essential in today's digital world. These developments, along with updated product videos, are uploaded as part of the investor presentation. For FY26, we anticipate continued momentum supported by certain regulatory and compliance mandates. Our priorities include expanding into Europe, strengthening the SMB reseller network in India for emSigner, and deepening automation and AI capabilities in both our e-signature and cybersecurity offerings. From a guidance perspective, we have an enterprise solution order book of 190 crores, going by historical trend, assuming relatively modest growth in other lines of business, and looking at the macroeconomic environment with slightly elevated levels of uncertainty, we are targeting a revenue growth of 25 to 30%, assuming both organic and inorganic growth. On the bottom line side, we are targeting to maintain the current levels of EBITDA and PAT margins, even after accounting for the one-off expenses such as ESOP provisioning, notional interest, and stock repurchase that are likely to continue in FY26. With this, now I hand over to Mr. Ritesh Paryani, our CFO, to make his remark regarding the financials.
Thank you, Chairman. Good afternoon, everyone. I am pleased to share the highlights of our Q4 and full year financial year 2025 performance. Our total income for Q4 financial year 2025 was INR 1,492.6 million, marking a 44.8% year-over-year growth. Gross profit for the quarter grew 8.7% year-over-year to INR 781.8 million, with a margin of 52.4%. EBITDA for the quarter was INR 371.6 million, registering a 2.4% year-over-year growth with a margin of 24.9%. Profit after tax for the quarter was INR 243.4 million, reflecting a 14.8% year-over-year growth with a margin of 16.3%. Now turning to the full year financial year 2025 performance, total income for financial year 2025 reached INR 5,278.4 million, representing a 38.9% year-over-year growth. The enterprise solution segment generated revenue of INR 4,135.3 million, while the trust service revenue stood at INR 1,058.5 million. EBITDA for financial year 2025 was INR 1,323.8 million, registering a 13.7% year-over-year growth with a margin of 25.1%. PAT for the year stood at INR 872.3 million, growing 14.3% year-over-year with a margin of 16.5%. That concludes my remarks. Thank you, and we may now open the floor for the question and answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Surbhi from Bellwether Capital. Please go ahead.
Yeah, hi. Congratulations on great set of numbers. So I just wanted to understand our India business enterprise growth has been very strong this quarter. Could you give some flavor on this kind of growth and what has led to this kind of numbers in terms of, say, for these government projects, for these more enterprise-led projects, something on the flavor of how India business has grown in this quarter?
Both government business and BFSI. Because in government business, generally in the last quarter, a lot of tender and all those things get finalized because they have to exhaust the budget. So generally, the last quarter always is good in the government business. In the BFSI also, if you see, we have got a number of customers where the combination of the C-signature, e-stamping, and the emSigner use cases have continuously improved, and remote signing has also continuously improved. So both BFSI and government put together, this has led to a good growth in the last quarter in the India business. Yeah.
Fair, sir. So our receivables have gone up significantly as on March 25. Would it be fair to say that this is because of some government business going up? Like, just wanted to understand, is that...
So in terms of amount, it has gone up. But if you see in terms of the number of days, it is almost remaining at 94, 95 days globally. So that way, in terms of the number of days, it has not gone up significantly. But little bit amount going up maybe because of the government, some large contract where the receivables are there. That's why if you see even the cash flow from operation is almost more than the PBT.
Right.
So that way, so whatever PBT generated, everything is received. So that way it has not increased or anything like that in terms of number of days.
Got it. And sir, on the new initiative, which is homomorphic encryption, wanted to understand, have we integrated these capabilities into our product stack? And even on the post-quantum cryptography side, are we at a POC stage, or have these capabilities been integrated? Just wanted to get some sense on that.
Yeah, post-quantum cryptography is already integrated. So wherever the customer wants, we are also pitching for that. But in that, there is a continuous upgradation of new algorithms and all that, which we will be continuously doing. But the basic, what is necessary, has already been integrated and the product has been completed. Then coming to the mobile PK also is completed, and we have even shown the demonstration to our controller of certifying authority and all that. In India, they need to pass a regulation for that, which may take some time. But in the meanwhile, we have taken the mobile PK to Indonesia and other countries also. Then coming to fully homomorphic encryption, there also reasonable level it is completed, but still some work need to be done, which I think maybe next 3-4 months or 6 months it will be fully evolved. Maybe on that I will ask Kaushik to answer on the fully homomorphic encryption.
So a lot of work has been done. So I think we had also outlined in the last call that some performance-related improvements need to be made, which essentially we are working on, because we are seeing more traction for the other two products, both in the India and the other geographies, which is why we are spending more time there. But in another 3-4 months, the fully homomorphic encryption product also will be integrated.
Okay. So what are our plans on the investment side? We're sitting on 188 crores of cash broadly. Would it be more towards acquisition? Would it be more towards building inherent capabilities on the product side itself? Any sense on how do we plan to use the cash?
It will be both. We are continuously evaluating, so if suitable acquisition comes, then we have to do it. And again, we have also in our presentation, we have said 7 to 9% R&D will be invested on product development. So there are also 3-4 areas where we are developing and strengthening the product, which I outlined briefly in my opening remarks. So both, it will be a combination of both.
And just one last question. What was the services revenue this quarter, and if you could break it between Icon 295?
No, service revenue total is around 37 crore rupees, or between 35 to 40 crore roughly, around 36 crore. So in that, because we are doing the integrated services, it is very difficult to break up. Gradually, what has happened is one side Icon, one side 295, then our own services are also there to the same customer. We are also selling our own products, so completely, so it cannot be bifurcated like that. But if you bifurcate, it may not give the correct sense of what it is.
Right, so out of 147 crores, roughly 35 to 40 crores is total services revenue.
Yeah.
Okay, thank you so much.
Right.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Parikshit Kabra from PKD Advisors LLP. Please go ahead.
Hi everyone. Thank you for the opportunity and congratulations on the great revenue number. I wanted to ask first about the margins. I'm noticing that both in the international enterprise business, for the last 3 quarters, our margins have dropped to in the low 20s as opposed to the late 30s or early 40s that they used to be. So what's happened in the international segment for the margins to come down? Is this a temporary shift or is this now the new normal?
No, if you see the composition of the international revenue, particularly USA, originally only Icon was in the service business. Now, so the 295 is also in the service business. So the proportion of service business in the US business has gone up. So that is one reason which is reducing. And the second major reason is the number of senior people appointed. Earlier only one of our person was there. Now we have appointed 2 senior people from DigiCert and also some 2 junior people from DigiCert. These are all adding to the salary cost. So, but it will not add in the gross margin level. Gross margin level, it is more to do with the proportion of service business in the overall business in US. Particularly the Middle East business, the margin will remain the same. It is not declining.
So then earlier question where you said that the services revenue is approximately 35 to 40 crores. But the base of this 35 to 40 crores, this will be mostly from the international enterprise number, or is the services revenue also coming from India enterprise?
This is mostly international enterprise, because in India actively we are not marketing the software services. It is mostly the international only.
Perfect, sir.
India predominantly we are focusing on the product and the trust services, which is the digital signature.
Got it. So you mentioned 35 to 40 for this quarter. Would it be possible to get this number for the last quarter and the quarter before that?
That immediately I do not have. It may be roughly in that bulk, little 1 or 2 crore less or something like that.
Okay, so services revenue is been more or less stable around this number.
Yeah. Service revenue overall year, if you take yearly, it will be around 140 to 150 crore.
Got it. Perfect. And the trust business also, again, there has been somewhat of a margin decline. I remember a few quarters back the conversation around how the go-to-market strategy is changing. Is that the reason for the decrease in margin, or is there something else? Yeah,
because earlier we were invoicing for the net amount. For example, if we sell to a partner, we were selling at 300, 400 rupees, so entire thing is a margin bill. Today, because this Controller of Certifying Authority has made a rule that we have to only bill the end customer and we can only pay the commission to the partner. So we are billing the end customer and paying 40% to 50% commission to the partners. So that's where the gross margin has reduced there, but the top line has increased. But the overall way top line has not much increased compared to last year is, as we said in the earlier quarter conference calls, the volumes have declined by 40 to 50% because of that change in the income tax rule and more number of certifying authorities coming and all that.
Got it. Perfect. Understood. And lastly, you mentioned, I think, that India business has done particularly well because of government orders in BFSI. Again, is this a Q4 trend, or is this now going to be a trend that we should start seeing in the next year also? Because I remember a few quarters back again that there was some stress in the India enterprise business, and we were thinking of changing focus more towards moving away from the India enterprise business a little bit, not focusing on it as much, essentially.
No. India enterprise, we never wanted to move away. Only hardware. What we were doing earlier, we were bundling the hardware. Because of the bundling the hardware, the receivables and other things were high, and also on the hardware, the profit margins are lower. So today what we are doing, we are only trying to sell our software. Unless the customer compels us to bundle the hardware, we don't generally bundle hardware. We allow them to directly purchase from the market. So that way our gross margin on the Indian enterprise business has improved.
Got it.
So earlier it was 66% from 1.5 years back. Now it became 80-85%.
All right. Perfect. All right. Thank you, sir. Thank you so much.
Yeah, thank you.
Thank you. We would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Chirayu Baheti, an individual investor. Please go ahead.
Hello. Am I audible, sir?
Yes.
So I could see that from past few years, the return on equity of the company is reducing.
Maybe can you talk a little louder? Not very clear.
So I could see that from past years, the return on equity of the company is reducing gradually. I can imagine it's because of a lot of acquisitions we are doing. But any plans that we could see this bottoming out and increasing in the upcoming years?
Return on equity mainly because the QIP was done. That was one thing. Then again under the Ind AS, what happens is the stock options, though actually it is all fully diluted and issued to a trust in 2016 itself, but based on the Ind AS methodology, it is getting added to the equity only at the time of exercise by the people. So that's where last 2 years, if you see, one because of the QIP and the other because of the exercising of the stock option, the base equity has increased and that has led to the return on equity reduction or stagnation. But from the next year onwards, that kind of reduction, no more. At the juncture, we are not thinking of any further issue at this time because already 184 or 185 crore cash balance is there. And also the stock option exercising also will not be so much as what it was in the past. So with the result, the return on equity may improve from the coming years.
Okay. Okay, sir. Thank you. And the receivable days, any plans to reduce it? Because earlier it was much lower.
No, it was not lower. If you see, we have also put that from 94 days, it has become 96 days. Only 2 days higher because it's a marginally. And out of that also, if you take a lot of things are less than 30 days, these are all orders which has come in the last month. That's why it is there. So that will get streamlined over time. There is nothing to be concerned about it.
Okay. Thank you.
Thank you. The next question is from the line of Srinath V from Bellwether Capital. Please go ahead.
Hi, sir. Just wanted to go to slide 12 in our deck where we have placed a roadmap for our identity and data security business. If you could explain the roadmap, the new products on all three product categories. Where are we in these products? What is the use case? When will the build out happen? That would be really interesting, sir.
I will ask Kaushik to do that because it's more technical.
Yeah. Thank you, sir.
Yeah,
Kaushik,
each product at a time and then I'll do it. So first, if you see Secure Pass, it was earlier called eMudhra. We had basically started as a multi-factor authentication, which essentially meant digital signatures, biometric and various other forms. Then we introduced single sign-on. So to give you an example, if you're logging into one application, you shouldn't have to type your password again and again. Then we rolled out a full-fledged identity access management where through a centralized sort of view, you are able to control which users get access to which application and what kind of permissions they have. Can they approve? Can they only view? Can they edit? And all those things. Now this whole paradigm is shifting to a new concept called converged identity, where it's not only identity access management, but also managed privileged access. And because environments have also become slightly more complex, where large enterprises are on-prem plus cloud like AWS, Azure, plus they use third-party SaaS platforms like Salesforce, the same user, what kind of controls he exercises in various different applications across all of these environments, and how do you get a centralized view? This is almost not only becoming a cybersecurity issue, but also a compliance nightmare. So that is where our roadmap is also heading. So while we have existing capabilities, how do we integrate capabilities of converged identity is where Secure Pass is heading. So for any large enterprise, it's a single pane of glass through which you get a view of your users who have elevated permissions, what they can do with it, and how they kind of authenticate, whether it's through passwords or OTP or biometric or facial, or in sensitive cases, even digital signature certificates. So it's becoming a much more comprehensive platform for mid-market upwards kind of enterprises to manage their access in a centralized manner. So that is product number one. Product number two, I will cover CertiNext and EMCA. EMCA has been around for a while, basically around issuance of digital signature certificates in line with global compliances and global standards. Continuously, the world is changing. For instance, post-quantum cryptography, and even within that, there are newer sets of algorithms coming. Even in the IoT and, for instance, the electric vehicle world, there are newer standards, protocols emerging. So constantly, we are enhancing. We've not only integrated the existing work on post-quantum cryptography, but enhancing the platform to meet various new emergence of algorithms, protocols, standards, as far as some of the new age industries go, right? IoT, electric vehicle, and even, for instance, next year, I think there is a huge trend around even humanoids. So how do you really control their security are also discussions that are happening, and we'll probably be prepared to meet that. On the certificate lifecycle management, which is CertiNext, there are some important trends going on globally. One is the fact that about a month or so back, the browsers, which is Apple, Google, Mozilla, basically passed a ballot saying in 2-3 years, the certificate that are currently issued for 365 days will expire in 47 days, which means it's going to be manually quite impossible to manage the rollout of certificates for websites. So if you go to a bank website, there is a certificate. Every 47 days, you have to keep renewing it. So there is a huge push towards automation, which is where CertiNext will play kind of a role in terms of automatically discovering, renewing, and provisioning the certificates. So that is kind of the world of CertiNext and EMCA. Third is more around data privacy, which is becoming big because India obviously on the verge of rolling out this DPDP Act. And as a consequence, we have so far addressed the data protection aspect, which is around data encryption. So any kind of personally identifiable information like name, email, mobile, how do you encrypt? But because DPDP is likely to be enforced with penal provisions, you have to now also have the capability to discover, classify sensitive assets before you're able to protect them. So that's where we are heading towards building out those capabilities. So it will become a comprehensive data privacy stack, not only doing data protection, but also discovery and classification. So with this, what will happen is there's a unified view of, not only user identity through Secure Pass, but also device identity through CertiNext and EMCA, and also the ability to protect any kind of personally identifiable information that you kind of capture as a consequence of your interactions with, your digital footprint that any large or mid-market enterprise would have. On top of this, we are layering in generative AI capability, which has also been outlined on a slide, is how do we sort of build domain-specific intelligence around cybersecurity, for instance, for banking, and allow the users to have Gen AI-based capabilities saying that, can you discover the certificate, can you rotate it, how do we identify anomalous behaviors in the way you authenticate, and so on, right? So there are a number of use cases that we are working on. So this is really the kind of view that we are taking, that user and device identity will converge, and in that convergence, data privacy will play a very important role, and we have to obviously, as a unique selling proposition, layer in generative AI capabilities.
Got it. In the data privacy stack, what are the products we have today, and how are we like? The other two stacks have a reasonable understanding, but in this stack, how will the product evolution take place?
Today, we have only key management and, as a consequence, ability to encrypt data. So far, that has been built as an extension of CertiNext, but now we see this taking shape as a separate product stack in itself. So the orange on the slide 12, which is discovery, classification, consent management, which are all basically from the data privacy standpoint. And then as a consequence, once you, let's say, classify something as sensitive, how do you encrypt, which will leverage whatever capabilities we've already built.
Got it. One more question on the U.S. market. Wanted to understand how the scale-up in private PKI opportunity is playing out in U.S. Have we been able to cross a proof of concept stage? How close are we to scale up? What has been the broader feedback from prospective customers? Any broad light you could share, that would be great.
Yeah, so we've crossed POCs in quite a few customers, right? Some of them have actively started using the product, started to scale up with us, both for eMSigner as well as, I think the question was specifically on private PKI, on the private PKI side as well. So there is an increasing demand for private PKI across a number of sectors, and our team is kind of actively working towards it, right? So to answer your question, we've crossed POCs in quite a few cases.
And also our product, if you see our product revenue itself from the US last year was maybe around $8-9 million, or at least $8 million.
Wow.
Only some eMSigner, but predominantly the eMSigner, which was cross-sold and also based on the POC what was sold and all that.
Got it. One last question, sir. We report this partner and direct contribution. Our partner contribution has significantly inched up, over Q4. Is this largely indicating our deeper engagements with system integrators, or is this coming out of a different channel? I just wanted to, was curious to know why this number has seen such a change.
No, we have made, last year we made a strategy to get into many types of partnership. One is the system integration partner and also the reseller partners. So actively we have put an inside sales team here who is chasing several partners, enrolling a lot of partners, and then continuously motivating the partners. And we made a partner-first approach by which some commission acceleration and so many things we have done. So because of that, the larger number of leads have started coming from the partners. So that's where now in one of the slides it is there, three-pronged strategy. One is the partner acceleration and globally how do we enroll more and more partners. And the other is in the India market, how do we go to the SMB and the retail with the M-Signer. And the third is how to create more and more global pull and all that through brand building and all this. So because of these initiatives, these are all little accelerating.
Perfect. Thank you, sir. And just wanted to make a comment. Given the kind of product stacks and everything you have built, I think at some point of time we should definitely aim to grow more than 25% whenever we do get an opportunity, sir. Thanks a lot. I'll get back into the question.
We will always try our best to then leave the rest to God.
Perfect, sir. That's the spirit. Okay, sir. Thank you.
Thank you.
Thank you. We would like to remind the participants that you may press star and 1 to ask a question. The next question is from the line of Rishi Maheshwari from Aksa Capital. Please go ahead.
Hi, thanks and congratulations for a very good set of numbers. I just had one clarification. On slide 30, when you mentioned 1,133 customers, they are all out of solutions and services. Am I right?
Yes. Yeah, not the DSC customer, because the DSC and eSign customers are in crores.
Correct.
Mainly solutions.
So I was just alluding to that and thinking about it that, while I'm looking at the growth, what I've plotted from your annual report and looking at revenue per customer, it seems to be more or less in the same range of roughly about between 30 to 40 lakhs. And I was trying to understand whether, is it possible to upsell, cross-sell, because you've been doing that across your product stacks to several other customers. However, that is not necessarily reflecting in revenue per customer as a number. Am I really?
It doesn't work that way, because even in our last year presentation, we highlighted that there's a land and expand strategy. So when a customer starts new with us, it's obviously a smaller value that they start with an overtime kind of scale. I think I would request you to look at the existing versus new composition. Existing customers have brought in 78%. Right, so if you look at the net retention by value, it's significantly north of, I think, maybe 100, 110%, right? So which is kind of a healthy number. So average value probably is not the best representation of the deal values that products get sold, given that there is a land and expand kind of strategy that we follow.
May I then understand what is the attrition in terms of the customers? If suppose this year this is 1,133, how many customers have been continuing from the past, and how many are the new customers?
Our retention by count also is closer to some 91 or 92%.
Yeah.
I see. Okay. Thank you. That solves my purpose. Additionally, I wish to just understand on a broader level, while we're looking at a lot of issues internationally, I know that you're not necessarily alluded to IT services businesses which are more affected by such spends. However, in terms of alliance, it is not too far away when the spending or discretionary nature of spending of some of your services comes across. Are you not facing any such issues at this point in time?
As of now, the cybersecurity is a need of the hour. So everybody wants to protect more and more. So that way, and also digital transformation, the M-Signer product, it saves a lot of money to them. So that way we are in a niche area in which up to now we are not seeing much of reduction in discretionary spending and all that.
Have you seen any form of cancellations of the orders that you had already bagged and it is either sealing a dealing or a cancellation of any form?
No. As of now, we are not seeing anything.
Fair enough. Thanks, really. This is good work. Please continue the good work. My best wishes.
Thank you.
Ladies and gentlemen, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Siddharth Mishra from Creagus. Please go ahead. Mr. Siddharth? Hello? Mr. Siddharth, hello.
Sorry,
Mr.
hello.
Siddharth?
Am I audible?
Yes, you are. You may go ahead.
Yeah, I'm sorry. I was using a headset. Hi, sir. Thank you so much for taking my question. So, first question is on the international expansion. We mentioned that the FY26 focus is going to be, expanding into European Union. So, if you can highlight that a little bit more in detail, the geographies that we plan to, target, maybe acquisition, there, possibly in the services side or in the product side, and I think in the past we have highlighted that we preferred entering into new geographies with partners, right? Maybe not hiring a full-time employees there. So has that approach changed? So, anything there, a little bit more details on the European expansion, that'd be helpful. Thank you.
European expansion, we started trying about 2-3 years back. Then we transferred one person from here, but without any base in Europe, it has been extremely difficult to get much business in Europe. In America also we faced the same problem. Then we created the base by acquiring some 2 small service companies. With that base today we have grown very well, and almost out of our revenue 38-40% comes from the North America. So similarly in Europe, some acquisition or some strategic tie-up may be needed so that it will give a head start, and from that head start we may be able to grow. So that is what we are thinking. And from that perspective, we have appointed a very senior person from the European geography itself, Mr. Carmine Auletta, as the MD of our European company. So that, and he was in the similar business in another company called Infosat, which is also a big company in Europe, based out of Italy. So he can bring new leads, and also he may be able to bring some quality acquisition candidates and all that. So all these possibilities are there. So that is our intention as far as Europe is concerned. And other geography expansion, almost other geography we are present. If you see Middle East, we are very well present. Then in Africa, reasonable presence is there. Even South America, reasonable presence is there. We are now able to sell in Colombia, then Chile, in Peru. Then if you come to Asia Pacific, again we are able to sell in Malaysia, Indonesia, then Philippines. So that way, here and all reasonable presence is there. Europe is where Australia and New Zealand, anyway, we are not trying as of now. But we felt Europe is a good geography to be there. So that's where we will try for this year, that kind of some acquisition or strategic tie-up possibility we will try.
Understood, sir. Thank you so much. And I think most other questions have been either answered or are present, in the presentation. Just one question on the CAPEX, number. I think the data center spending, what we highlighted is probably done, or maybe if you want to highlight what are the components there in the CAPEX, and can we expect that to come down in FY26?
Data center was part of the original IPO. So those data centers are already done. So there were 3 data centers, one in Chennai, one in Bangalore, and one in Amsterdam. Amsterdam also was done already. But now that given the US business is really growing up, and then giving a good size of business, and then if we have a local data center, it would be preferable for the US customers, which also some customers have told us. That's why instead of again re-spending, we are shifting the Amsterdam data center equipment to the US, to Salt Lake City and also in New Jersey. So with that US data center itself, we can work. In Europe, later on, if necessary, we can, based on the expansion, if necessary, we can set up. But as of now, we have no plans for that. Then with that, there will be no more data center spending. All the capex for this year is predominantly on the product development, what Kaushik explained. The 3 or 4 major product areas. That's 7 to 9% capex what he has outlined in the presentation.
Got it, sir. That's it from me. Thank you.
Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Venkatraman Srinivasan for closing comments. Sir?
As there are no further questions, I would like to thank everyone for joining the call today. We remain focused on delivering consistent performance and innovative solutions that enable secure digital transformation for our clients across the globe. For any additional information on queries, kindly get in touch with our investor relation advisor,